Plug Power stock is trading around $2.53, up roughly 27% in the last 52 weeks. Does this stock keep climbing or does it bleed out from here? Well, I gotta say, I'm neutral, maybe a little curious, but not quite convinced. Revenue last quarter was $177 million, up just 2% year over year. And net loss widened to $364 million. Now, yes, electrolyzers brought in about $65 million and over 230 megawatts are mobilizing worldwide, including a 10 megawatt delivery in Portugal. But here's something that I haven't heard anybody talk about. They plan to monetize $275 million worth of electricity rights while their Georgia plant ramps to record output. If that liquidity lands and output scales, the story changes. If it doesn't, though, dilution and delays just become part of the story. Hey, what's up? My name is Rick Orford. I've been trading since 1999, and no, I'm not a financial advisor. That's a good thing. I break down the numbers so retail investors like us can make smarter, more confident decisions with our money. And that's why in this video, I'm going to be discussing the real drivers that I see of Plug's future. That's growth versus cash burn, execution versus promises, and whether the current price makes sense for long-term investors. And I think by the end of this video, you're going to know exactly what I'm watching, what would make me want to buy, hold, or walk away. I want to thank The Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. And you all know how much I love researching new stocks and trying to find the next best investment. So I'm proud to partner with The Motley Fool to bring you 10 stock picks from their popular product, Stock Advisor. Stock Advisor has beaten the market by almost 6 times. Go to fool.com/Ricko to get your 10 stock picks right now. Plug Power is an American alternative energy company that specializes in green hydrogen solutions, and that includes electrolyzers, fuel cells, hydrogen plants, and fueling systems. They're trying to own the entire stack, right? From making the hydrogen to using it, which is really where the upside lives if the execution can deliver. Now, Plug Power was founded in 1997 and they're based in New York. And the company went public in 1999 during the dot-com bubble. Now, the company did expand through acquisitions like through United Hydrogen, and they continued building a green hydrogen ecosystem through strategic partnerships and innovations across multiple hydrogen technologies. So I would say that Plug Power isn't just selling parts, it's building the market that it wants to win. But building an ecosystem burns cash before it prints cash. So my question is, can they bridge that gap? Well, right now, Plug's main product line is GenDrive. This is a fuel cell system that powers warehouse equipment like forklifts. It operates by refueling with hydrogen, completely removing any charging downtime. And this makes it an easy choice for warehouse operators. So, faster fuel and go and less idle time, better throughput for high-velocity warehouses. I mean, this is great for ops, but only if hydrogen supply is reliable and cost-effective. Now, another product line that they have is their Gen Eco electrolyzers. Now, what's an electrolyzer? An electrolyzer uses electricity to split water into hydrogen and oxygen. Very cool stuff. And then the hydrogen is captured and used for various purposes. Think of electrolyzers like the hydrogen printers that need a ton of electricity to run. And the cheaper the electricity and the higher the uptime, the better or the more the company makes, right? And gets to keep. The company designs electrolyzers for various power sources, enabling customers to produce hydrogen for fueling Plug Power's fuel cells and, of course, other energy applications. And that vertical loop, make it, move it, use it, that's the thesis behind Plug Power's business model. Plug Power is also building hydrogen hubs, which can potentially power the entire hydrogen supply chain. These hubs are powered by Plug Power's own technology, including electrolyzers. Now, these hub economics are going to come down to capacity utilization and power costs. So you're definitely going to watch those two like a hawk, because if utilization rises faster than costs, margins will rise. If not, the stock drops. So let's look at Plug's stock performance. Now remember, price action doesn't necessarily equal value, but it does tell you where expectations just moved. Last time I talked about Plug Power stock, it was trading around $2.36. Today, it's up 7% since my last coverage to around $2.53 and has a market cap of around $3 billion. Plug Power stock hit a 52-week high of $4.58 on October 6th. Year to date, the stock is up about 19% and around 27% over the last 52 weeks. So the stock is climbing off its lows, but I say it's still maybe a turnaround trade, not quite a victory lap just yet. Also, it shouldn't be any surprise that the stock has a 60-month beta of 2.28. It just means the stock is more than twice as volatile as the overall market. The beta measures how sharply a stock moves compared to the benchmark, which always has a beta of 1. And because Plug's beta is well above that level, well, the price tends to experience much larger swings, both upward and downward. And this makes Plug Power high risk, high reward investment with the potential for stronger gains, but also deeper losses. In practice, that means wider stop losses, longer time horizons, and no oversizing. Now, a question a lot of you are asking is, do Plug Power's financials support the stock price? I mean, this is something that's come up in my Discord channel just recently. So let's look at Plug Power's recent numbers, because they just released their third quarter financials and they reported revenue was $177 million, up just 2% from the same period last year. But there's a but. Net losses were also up 72% to $364 million, or about 31 cents a share. Remember, a loss. So these financials tell me that, or they show me that growth is crawling and losses are skyrocketing, right? Execution and cost controls are the choke points here. Management also reported that Plug Power continued to advance their strategic priorities during the quarter by expanding deployments, increasing customer adoption, and improving operational efficiency across their entire core hydrogen business. The company also achieved solid progress with their Gen Eco electrolyzers, Gen Drive fuel cells, and hydrogen production network. Over 230 megawatts of Gen Eco electrolyzer projects are now being mobilized across Europe, Australia, and North America, and this reinforces Plug Power's global position in large-scale hydrogen solutions. And a key highlight was the delivery of a 10-megawatt PEM electrolyzer in Portugal, the first phase of a planned 100-megawatt installation. If deliveries like this keep hitting their milestones, revenue recognition should follow, but any miss here will signal some slippage. Speaking of which, the Gen Eco electrolyzer segment made up about $65 million of this quarter's $177 million in revenue. So that's the engine that they need to scale. Watch the bookings, watch the backlog, and the delivery cadence. In their fuel cell segment, Plug Power proves that they continue to have some strong customer momentum as they deliver Gen Drive and Gen Fuel systems for new customers. And proof points like this, they matter. Each successful site can turn into a fleet-wide rollout. Plug Power also strengthened their hydrogen production capabilities by extending a multi-year domestic supply contract through 2030 and achieved a record output at their Georgia green hydrogen plant. They can now produce 320 metric tons of liquid hydrogen with high efficiency and uptime there. Also, Plug Power announced plans to monetize additional electricity rights in a move expected to generate over $275 million in liquidity, while refocusing capital on higher return hydrogen initiatives. Remember, liquidity buys time, and time buys optionality. Closing these transactions is critical to avoid expensive capital. So that's what I've got for Plug Power's third quarter financials. Of course, I'll cover their future developments and other popular stocks in the future, so be sure to watch out for my next videos. Now, with all that out of the way, I'm sure you're wondering if Plug Power is worth buying at these levels. Well, consider that a consensus among 23 analysts that cover Plug Power currently rates the stock a hold. But there is a high target price of $7, and that suggests as much as 177 upside from the stock's latest closing price. The average score is 3.09, and it hasn't changed over the last 3 months. And that's a wide dispersion story, right? Some see a multi-bagger potential, while others see a capital treadmill. But despite their widening losses, Plug Power continues to push forward on multiple fronts, expanding those global electrolyzer deployments, strengthening its hydrogen production, and increasing its customer adoption across key markets. So I think it's fair to say that analysts are in a watching phase, and any further development along key areas might finally send Plug Power stock soaring, though the opposite could also be true. But what are you seeing, right? Do you think we're going to see a ratings upgrade in the near future? Let me know in the comments below. And while you're there, if you found the video useful or helpful, like and subscribe, because it'll help others find the video, it'll support the channel, and you won't miss out on any of my future deep dives. Well, folks, that's it for me today in this video. I wanted to thank you so much for watching, and I'll see you next time.